Welcome back to Market Headline. During the COVID-19 pandemic and the related economic fallout, the response of the stock markets has raised concerns as well as the questions. There is some evidence that shareholders have favored credit facilities and government guarantees, lower policy interest rates, and also lockdown measures mitigated the economic fallout. However, fundamentals only explain a small part of the economic variations at the country level. So therefore, we are going to have further discussions with Fahrul Fulfian as the Chief Economist of Trimegah. Hello, sir.
Hello, how are you?
Very well, sir. How are you?
I am very good.
All right, sir. Seeing these conditions, it is not yet controlled as COVID-19 pandemic in Indonesia added 47,000 cases yesterday. And can you tell us about these conditions right now through economic observer's perspective?
Okay, from the economic point of view, for sure we need to realize that the social restriction or PPKM, it is likely to continue, although the government is already introducing some kind of flexibility if the case to edge lower. But indeed, at the bottom line, what we need to expect is at this quarter, at the third quarter 2021, the growth number of Indonesian economy should be lower than the second quarter, and we need to tone down the expectation on many things, especially on the recovery. And for the businessmen have to recalculate again about their business plan. So now the recovery path becoming more unsure.
All right, sir. So there are a lot of uncertainties right now going on because of this pandemic. Seems like has not yet stopped to sign. And of course, we know that some regions will re-implement the PPKM level 4 from August 2nd, 2021, including Jakarta itself. So is the policy suitable, or do you think that there is another way to solve this problem?
I think from the point of view of the requirement of the social restriction, this policy is already suitable. But what we need to add to this policy is more about the social safety net, in my opinion. Because at the current situation, the one who get hit hardest by this pandemic and the social restriction is for everybody who is working at the non-formal sector of the economy. We could know that everybody who has a mom and pop store or who has a food stall, that's the part of society that are hit hardest most. So to tackle this, we think that government needs to scale up their social benefit size during this pandemic situation. And targeting not only for the one who is working at the formal sector, we need more stimulus at the non-formal sector.
Of course, more stimulus means that more energy that pull up to the government to save all the, the informal and also the formal workers in here. But then right now, sir, we have studies that have examined the impact of COVID-19 pandemic on the downside risk of the stock market. So what do you have in mind about stock market?
I think if the studies is quite valid from the fundamental side, from the performance of the company, the study is valid. But in the other hand, we need to know that the main driver of the stock market nowadays is not only about the fundamental, but also about the liquidity in the financial market.
I see.
What happened is, in this COVID-19 pandemic situation, most of the people, the rich one, the one who has money, do not know what to spend during this pandemic. And so many business close their business, cut their employee, and also cut down their spending. But at the same time, more idle money. So at the current situation, we will have interesting condition where, although the economy is bad, that's not necessarily implied to the bad stock market. As we know that our stock market is quite resilient, and today the stock market is already about 6,100 again. Once again, I will emphasize that liquidity is the key at current situation.
Liquidity is the key. That's a really good sentences for you, sir. And as we know that even though the economy is kind of fall out a little bit, but then when we talk about stock market, it becomes so resilient nowadays. As we know that, in short, JCI today went up around 0.53%. So do you think that does GCI have chance to go up again, or it has chance to be lower?
Okay, at the current situation, the main support for the stock market is mostly coming from the domestic investor. The proportion of ownership in Indonesian stock market now is already dominated by the domestic investor, higher than 50%, and the trading is around 70% to 80% dominated by the retail investor. So what we miss at this current stock market situation is the presence of the foreign investor. We do expect that the GCI to go up again. Currently, our company, Trimegah, expect GCI to reach 6,700 this year. The next driver for the increase of the GCI, of the stock market, should be driven by the increase of the presence of the foreign investor. To increase the presence of the foreign investor, what we need is the presence of tech company, because worldwide currently investors have a big appetite on the tech company. So recently we already know that by next week we will have a big new tech company to be listed in the stock market, and the other one is likely to be listed later this year or early next year. I think that will be a catalyst for higher foreigner presence in our stock market, which led to higher stock price.
All right, sir. That is really interesting point that you address about the GCI movement, that you think. Is this very optimistic that you stated that GCI will reach likely 6,700 by this year? Well, we know the situations right now, it's 6,120. Very optimistic of you, sir. And then, as we know...
But as I mentioned before, to make it happen, we need to have higher presence higher presence of the foreigner in the stock market, and also new technology company in our stock market.
I see.
So as we know that Bukalapak will go into market by next week.
Yeah, because people are very, very waiting about the Bukalapak's IPO nowadays, because it's a tech IPO, and somehow investors are very favorable of the tech IPO nowadays. But we can see that there are a lot of catalysts that moving the stock exchange right now, and one of them is the national economic recovery. And to support the national economy, currently government is about to give many financial aids to people. And there are many financial aids that government has given to people to cope with the pandemic. Which aid that you think the best and efficient?
Okay, for this question, I think the best and efficient should be two different type of stimulus.
All right.
Something which is we could say efficient for the government, not necessarily a good stimulus. As we know that government stimulus currently is mostly going into a person or a family that already have a salary, but the salary is below 3.5 million. Okay, because this stimulus is going into the formal sector, it is efficient. It is an efficient policy. But how's the overall impact to the economy? The overall impact to the economy is positive, but will not be as good as if the government provide more stimulus or the social benefit to the non-formal sector. That's the best for giving to the non-formal sector, but likely less efficient, because the one who is working in the non-formal sector is not well recorded in our national data. So I suggest that to get recovered from this pandemic economically, I suggest that government for this year to put more emphasis in helping people who is working in the non-formal sector. If this situation achieved, we should have recovery in our consumption. If we look at the balanced situation of our financial player, all the financial market is in the good shape. What the government need to help now is the one who is working at the non-formal sector.
Of course, it is very resilient, and of course, government needs to enhance social benefit for the non-formal sector. Due to the limited time, sir, I'm sorry, this is our end of conversations. Really delightful conversations. Thank you, sir, for your time with us.
Okay, you are welcome. It is my pleasure.
Thank you very much. And yes, viewers, market headlines will be right back after this quick break. Stay tuned.